Hello, this is Pooja Sri from Tirthangalnadar College. So we are going to discuss now about income tax law and practices 1. The second topic, which is unit 2, income from salary. Now we can see the different heads of income. So taxable heads of income. This can be also called as heads of income or income from income tax. The firstly, income from salary. Secondly, income from house property. Thirdly, income from business or profession. And fourthly, income from capital gains. And finally, it is income from other sources. Now, we are going to discuss the first head of income, which is income from salary. Salary income is the paycheck you get every month from your employer. An amount received from your employer in form of bonus, allowance, perquisites, etc. is a part of your salary income only. So pension received by you after your retirement, not family pension, is also part of the head of the salary income. So now we can see that salary income is a check we are going to receive from the employer for what we are going to do work towards the particular organization or the particular place. Now we'll see what is the components of salary. Wages, annuity or pension, gratuity, fees, commission, allowance, perquisites or profit in lieu of salary, advance of salary, amount transferred from unrecognized provident fund to recognized provident fund, contribution of the employer to a recognized provident fund in excess of the prescribed limit, a leave encashment, compensation as a result of variation in service contract, etc. So the next thing is types of allowances in a salary slip. Firstly, taxable allowances. Secondly, partly taxable allowances. Tax exempt allowances. First thing, taxable allowances. Under that, the first thing is going to be DNS allowance, fully taxable percentage of base salary. Secondly, overtime allowance, fully taxable pay for overtime work. City compensation allowance for high cost of living in a big city. Interim allowance, fully taxable substitute for the final allowance. Project allowance for project related expenses. Next one, taxable allowance continuation. So meals allowance, taxable allowance for meals or tiffin expenses. Cash allowance for weddings, funerals, holidays, etc. Non-practicing allowance, which is fully taxable, special allowance for doctors. Warden allowance, special allowance for educational institution keepers. Servant allowance, which is compensation for domestics helps salary. Partially taxable allowance. This allowance helps employees cover their rent expenses. It is fully taxable for those only living in rented houses. According to section 10, subsection 13A of the Income Tax Act, HRA is partially exempt from tax. The exemption is equal to the lowest of the three categories, which is actual HRA received, and then secondly it is rent paid minus 10% of basic salary. So if the people is going to live in metropolitan city or non-metropolitan cities, which is based on that, the percentage may vary, which is 40% of salary and 50% of salary for the metropolitan city people who are going to live in the metropolitan cities. So the rest partially taxable allowances are medical allowance, tax free up to only 15,000 per year. Special allowance covers personal expenses. Conveyance allowance, tax free up to rupees 1,600 per month. So children education allowance, tax exemption up to rupees 100 per child per month. For the exemption is for only 2 children. Leave travel allowance covers travel expenses when on occasion or vacation, but not accommodation or sightseeing expenses. Exemption subject to limits and conditions. Non-taxable allowance. So allowances can paid to the government servants. Allowances paid to government employees for rendering services about abroad are tax free. Sumptuary allowance paid to judges. Sumptuary allowance paid to Supreme and High Court judges are tax free. Compensatory allowance paid to judges. Compensatory allowance paid to Supreme and High Court judges are exempt from taxes under Article triple two subsection 2 of Indian Constitution. Allowances paid to employees, UNO, United Nations Organization employees in India receive allowances covered by the United Nations Privilege and Immunities Act. So, other tax free allowances are academic allowances, daily allowances, helper allowances, uniform allowances. Now, we'll see what is the perquisites. Perquisite may be defined as any casual emolument or benefit attached to an office or position in addition to salary or wages. So, perquisite is defined in the section 17 subsection 2 of Income Tax Act of the following. It's going to include in this. The first thing is value of rent-free accommodation provided by the employer. Value of any concession in matter of rent respecting any accommodation provided to the assessee by his employer. Thirdly, any sum paid by employer in respect of an obligation which was actually payable by the assessee. Finally, value of any benefit amenity granted free or at concessional rate to specified employees, etc. Continue to that. The value of any specified security or sweat equity shares allotted or transferred directly or indirectly by the employer or former employer free of cost or at any concessional rate to the assessee. Any sum payable by the employer which is directly or through a fund or other than a recognized provident fund or an approved superannuation fund to effect an assurance on the life of the assessee or to effect a contract for an annuity. The amount of any contribution to an approved superannuation fund by the employer in respect of the assessee to the extent it exceeds 1 lakh rupees, and the value of any other fringe benefit or amenity as may be prescribed. Basically, the perquisites are divided into two parts: non-monetary benefits and the monetary benefits. So, monetary benefits or monetary perquisites are taxable for all the employees, but the non-monetary benefits or non-monetary perquisites are taxable in the hands of the specified employees. Reference to the section 17 subsection 2 subsection 3. RFA. So judges, officials of the parliament or union minister and the leader of opposition, employees working at specified places are fully exempt. But other employees, which is house owned by employer, specified percentage of salary depending upon the population of the place of accommodation consist of. House hired by employer, rent paid payable by employer or 50 percentage of salary, 15 percentage of salary, whichever is lower. So government employee, only the license fee. So these are the some of the benefits of the employees: meal breaks, social securities, perks and bonuses, pay raise, employees allowance, achievement award, health insurance, paid vacations. To whom the perquisites are available? So, firstly, taxable for all the employees, taxable for a specified employees, and exempt from all tax for all the employees, which is this is for government employees. Taxable for all employees will be some of the things like for example, meals allowance. Specified employees going to be non-government and government employees, which is going to be deferred. Income tax allowances and deductions allowed to salaried individuals. Exemption of allowances, house rent allowances, standard deduction, leave travel allowances LTA, which is mobile reimbursement, books and periodicals, food coupons, relocation allowance, children allowance. So allowances with the deductions. So medical expenditure and insurance premium, which is section 80 subsection D. Section 80 subsection D is going to tell a deduction can claim on medical expenses. So one could save tax on medical insurance premium paid for the health of self, family, and dependent parents. So the limit for the particular allowance will be rupees 25,000 for premiums paid for self or family. Rupees 50,000 will be the limit for premium paid for senior citizens. Additionally, health checkups to the extent of rupees 5,000 are also allowed and covered within the overall limit. Deduction of up to 50,000 with respect to medical expenditure incurred by the senior citizen 60 years or above or towards senior citizen parents, provided they are not covered under any mediclaim policy. The taxpayer can claim a maximum deduction of either 50,000 including the premium amount and the medical expenditure if he is a senior citizen 60 years or above. In addition to that, if he is paid the medical bills of his senior citizen parent, he can claim additional deduction of up to 50,000. Your employer may pay the premium on or your behalf, deduct it from your salary. Such premium paid is also eligible for reduction under section 80D. So interest on home loan, section 80C and section 24. Another key tax saving tool is to interest paid on home loans. Home owners have the opinion to claim up rupees 2 lakh as deduction for interest on home loans for self occupied property. The income, if the house property is let out, you can claim a deduction for the entire interest pertaining to such a home loan. The loss from house property that can be set off against other sources of income has been restricted to rupees 2 lakh. And in addition to the above, one can claim the principal component of the housing loan repayment, which is the deduction of ATC, a maximum amount up to rupees 1.5 lakh. Thank you.